right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all back and happy Tuesday to you. We're going to get through our morning analysis and go through all the majors. We have a lot of data coming out today. Well, not a lot. I mean, we have CPI data. We have also dairy auction results, which can obviously affect the Kiwi dollar, especially as the Kiwis run right into resistance this morning. And then we have manufacturing sales numbers as well out of Canada. So some things hopefully that are going to move the market, because yesterday was by far the most boring fall session that I think I've witnessed in quite some time. It felt like a summer trading session. So hopefully, things pick up this week, and especially today. All right, so we're going to start with the euro as we normally do, and just get through all these majors, especially ahead of the U.S. data that's coming out. So going into the euro dollar, taking a step back into what's happened overnight. We were expecting a move up towards 110.50 yesterday, and you can see, I drew it clearly on the charts that we were looking at yesterday, looking for a move up to 110.50 to get on the short side. Unfortunately, we just never got it, and I think that's one of the more surprising moves that we've seen out of the market, is just that there was no dollar weakness at all. This euro has just been underperforming, which I think illustrates just the sheer weakness that we have in the euro dollar at the moment. I mean, the euro dollar is really threatening, in my opinion, to trade back into the 104, 105 area. I mean, we're at risk now because of the lack of ability for it to rally. Once we cleared last week this upsloping trend line, after we cleared this upsloping trend line, it's really been under pressure since then. Now, the last line in the sand that we have here is this 88% retracement. You can see it right here. All right, if you take the spike low in June to the high in August, the 88% retracement comes right into where we traded down to, about like 109.60. Then we have horizontal support at 109.50, right, roughly 55, I think it is. That support, if it gives way, in my opinion, it opens the door for break into new trend lows. I think we'll very easily trade down towards 108. I think we're at risk of that type of move now. And the reason why I say that is because of the lack of ability that we have in the lack of ability to rally at this stage in the game. Now, if we get lucky, CPI data comes in, like, the market's looking for 0.3%, I think, on CPI today. Let me double check that. 0.3% at CPI, core CPI at 0.2%, which, we talked about a few moments ago, about 10 minutes ago, that inflation's starting to run hot. We're starting to see it globally, starting to heat up a little bit, and if it's making those pressures are making its way to the U.S., which, if you remember last month, CPI came in a little bit better than expected, from what I recall. Let me just double check that. Yes, they came in a little higher than expected last month. If that's the case again today, and CPI climbs up to 0.4% or so, the euro is not going to. I mean, we could very easily breach new trend lows. Now, if it comes in in line, we might be able to rally to 110.50. But I'm not going to write off 110.50 at this point. I think if we do get a move up to 110.50, you got to be a seller up there. I think that's going to be resistance. We do have a bearish bias. Given the fact that we've broken through all these trend lines, and we are persistently staying weak, I think you have to continue to have a somewhat bearish bias and bearish spin on this particular currency. Now, support here, even though we have the 88% retracement that's holding, I think we really have to pay closer attention to the 109.50 support. And if that breaks, like I said, I think we go into new trend lows. I think if we break 109.50, You know, and I'm going to put an asterisk there because I think it's so important. If we break through that, I think we'll see 108 really quick. You know, when I say really quick, I'm talking probably next week. I don't think it's going to be much of an issue for us to reach this 127% extension of this last rally. I don't think that's going to be much of an issue at all. Okay, but first things first, we've got to break. You know, either the 110.50, which is this yellow line up here, or the 109.50, which is the lower horizontal trend line there. Okay, all right. Let's go into the cable. Now, the cable's had a nice recovery. Yesterday on the Lunch Money webinar, for those of you that were on the Lunch Money webinar with me, you know, we were talking about a break above 122 creating a squeeze. Well, that happened in Asian trade. So that shouldn't have surprised anybody. I mean, we broke, you can see right here, you know, the market was 1900 hours my time. It was in Asian trade, and, you know, we squeezed going into Asia, and then, you know, then you throw on some, you know, stronger UK inflation, you know, that you know, spiked us up even further. Now, I'm hesitant to believe that we've got too much upside left here in the cable. You know, the upside probably will be capped near the 618 retracement. We also have horizontal resistance that comes through here. So any move up to, let's just call it 123.25, it's probably going to find some sellers. I don't think I'd be chasing the cable higher here. You know, unless inflation comes in completely benign in the U.S., like let's say inflation comes in flat, which would be a big miss. All right, if that happens, then the cable's probably going to squeeze back to 124. I don't think that's going to be the case. Here, we noted that rallying RSI yesterday, so I'm going to just delete it. 123.25 should be good resistance today. Okay. And by the way, just so you all know, we are in a bearish trend. Excuse me. Even though yesterday I said we were probably going to squeeze higher, it's still a bearish trend. You know, we have to, in my opinion, as long as we stay below 125, there's no reason to be on the long side of the cable. You know, we'd have to take out 125 to even remotely take off some of this downside pressure. I mean, this is just a bounce in a very bearish trend. That's all we're seeing right now. I guess we should note that we are making higher lows, low, higher low, higher low, consistent low. You know, so that's constructive for the bull case. That was one of the reasons why I didn't mind buying some pound crosses yesterday, which I picked up. I didn't mind doing that just because of the fact that we were, you know, constructively making some higher lows. But that doesn't mean I want to. That doesn't mean that I also believe that the pound has not seen. I mean, we've seen, you know, the low. I actually think that the cable can trade down into the teens. I think the pound can trade much lower than that, actually. But for right now, the pound is trying to base. All right, until there's going to, you know, undoubtedly there's going to be some more news that comes out about the cable, whether it's you know, more news on, you know, Theresa May probably say something about the Brexit, and, you know, sparks all new selling pressure, goes in the cable. You know, right now traders have ADD, so they're not focused on Brexit. They were, you know, 2 weeks ago. Today, they're not really paying close attention. You know, they're focused on other things. Then they're going to hear Brexit. Oh my God, it's coming soon. And, you know, we haven't even faced that yet. And then the pound comes under pressure again. Again, traders have ADD. They're not really paying attention to it at this moment. That's not saying it's gone away either. Okay. So support. Now you have to imagine the breakout point at 122 is probably going to offer us some support today. I'd venture to guess that, we probably will find support ahead of that, but yeah, you take some of these, you know, I doubt that's going to do anything. Yeah, I would assume that anybody who's stuck short the cable right now, they're probably looking for the exit. So you have to, ask yourself, well, where are they gonna say, all right, I'm happy with that. Probably the 122 level. So any retest of 122, you're probably gonna find some buyers down there. Okay. All right, let's take a look at the Swissy. Now I'm long some Swissy. If you don't know the reason why I'm long the dollar Swiss, uh, let me explain. Okay, I bought this while I was on vacation because I knew we were outside of this major channel. All right, it's this channel has kept us in check since a year ago. Basically, you go back to October. We broke this massive multi-year. When I say multi-year, I'm talking like 20 some odd year trend line. Okay, or 12, 13 year, I forget what it was. So anyway, you take the highs from like 2000, all the way through here. Trend line, trend line, trend line, trend line. We broke that. Ever since then, last year in October, we've been now in this like downward sloping channel. We started making higher lows, earlier this year, and finally have broken higher. And I think it's bullish. As long as we can stay above basically 98 cents, I don't think there's any reason to be bearish. One of the other things I've kind of liked about the Swissy is that even as the stock market had been under a little bit of pressure, it really hasn't pressured the dollar Swiss lower. So that's good. Now, I think a couple key levels need to be breached. First of all is 99.10, which is this high here, and these are the same numbers that we wrote down yesterday, so nothing's changed. 99.10, and then beyond that we got 99.50, right, which is the spike high here. 99.50. Above that, then you're now talking, we've definitively have made a higher high, because we're already posting a higher high here. Higher lows, consistent lows, higher lows. Okay, higher lows, consistent lows, higher lows, higher highs, marginal. A break above 99.50 would do a lot to build the bullish case in the dollar Swiss. Okay, so 99.50, it's a major hurdle, and above 99.50 is where I start getting a little bit more aggressive on my Aussie or dollar Swiss longs. All right, now support that'll take the downside pressure off of the Swissy would be a move below 98 cents, but really, this breakout point should hold, which 98.35, 98.30, I think is what we wrote yesterday. All right, 98.35, just in case we have inflation that comes in a little benign. All right, it is bullish. Now, it's bullish because we're out of this, year-long channel. It gets really bullish above here. All right, let's go on over the yen. I'm also long the dollar yen. If you do not know why I'm long the dollar yen, I'm going to take you over to, this is Forex Analytics. Let's go over to the homepage, blog. Is the dollar yen at risk of a rally? Here, you guys, I'll put that in the chat box. Read that blog, and if you don't know why I'm long, why I'm long the dollar yen, that should give you a good explanation of why I've been, you know, bullish the dollar yen. So now with the dollar yen, it's consolidating, and it's been consolidating, and the thing that's been most impressive about the dollar yen is that it hasn't pulled back as bonds rallied back yesterday. You look at the 10-year and you look at the 30-year. Here, I'll come back to the yen here. Here's your 10-year. 10-year, we had this bounce yesterday. 30-year is coming. There we go. We had this bounce yesterday, and the dollar yen didn't care. I mean, it pulled back a little bit. We pulled back, what, 20 pips? Here's the thing. If the 30-year, which this is the ZBs, right? If the 30-year breaks down, which it's already started to, break through some of the support, but it breaks that trend line there. And here's a 10-year. The 10-year breaks this 38% retracement right here. Yields are going to scream. Yields scream higher, and that dollar yen's going a lot higher, right? So here's your dollar yen. Now, going back to yesterday's analysis, we had drawn out a triangle, right? We were here. I said, look, if we get a dip down to 103.70, that's what we wrote down as support. If we get a dip to 103.70, it's not going to be a bad place to be long. I drew that yesterday. Well, we went to 103.68 overnight. I think that was our overnight low. And that's good, right? We hit it. Now, if we break 104.20, that will be bullish. 104.20, and then also 104.60, which is major resistance, because I'm going to get aggressive, the dollar yen, if we break above 104.60, which, as you can see, we're building this nice little triangle, which, you can call it a pennant, which is a bullish continuation. Tends to be after a strong move higher. So I'm just looking for a continued breakout at this point. All right. Okay. And 103.68 is now support for today. And we are bullish near term in the dollar yen. Also keep in mind, just so you all know, we've broken out of the channel that's had us basically in check all of 2016. We broke out of that a couple of weeks back. Okay. Coffee, good. All right. What's next? Let's go over the Canadian. Now the Canadian, yeah, I'm not sure, and I told you guys yesterday, I wasn't sure how to play the Canadian. I wasn't convinced that the dollar Canadian was bullish. The dollar looks pretty constructive against some currencies. The dollar Canadian hasn't been performing well. Now, here's the thing that you have to note right at this moment in time. Crude oil was weak yesterday. The Canadian was strong. I was surprised how strong the Canadian and the Norwegian krona was yesterday, considering how weak crude was. Crude was on the neckline of a possible head and shoulder pattern yesterday, and the Canadian and the Norwegian krona both were suggesting that crude wasn't going to break down yesterday. But it was close. But crude looks like we're trying to roll over this morning, which might allow for a bounce here in the Canadian. Now, I'm not long the dollar Canadian. Matter of fact, I don't have any. Oh no, I do have pound Canadian exposure. I take that back. But I don't. My Canadian exposure is very limited because my pound Canadian position is very small at this point. This might be a place to buy the dollar Canadian. I mean, if you look at the fib from here, we're at the 786 retracement. If you go from the trend low over here, okay, actually the 50% retracement comes in a little deeper. I don't know what to do with the Canadian. I'm still a little lost here, and um, I guess what we should note for today is this 130.45 as support. It's minor. It's minor support. It's not great support. It's not good enough support for me to trade against it. Meaning for me to be long right now. I don't. I'm just not comfortable trading the Canadian at this point. Um, we do have manufacturing sales coming out today out of Canada. I don't know how much that's going to influence the Canadian, but see the spike low here? See that all those highs right here on the 4 hour? Obviously, we're going to have a little bit of a trouble at 131 because if we can break through 131, that might allow for a squeeze back up towards 132. It's possible, but again, I'm just really not too sure what to do with the Canadian at this point. We are range bound. All right, let's do the Kiwi really quick. Let's get the Kiwi done before we take a break. So the New Zealand dollar, I am short. I'm out of the money. My cost average is at 71.50. I've been building a short since yesterday, and I should be adding to it right now. I'm just not. Just because I've got dollar exposure in a lot of different spots, so I don't really feel the need that I need to continue to add to my Kiwi. But I think this is the place to be short the Kiwi dollar, if you ask me. We have our head and shoulder pattern. We're back at the neckline. Now this is also, if you guys missed it because I deleted it, but I'll just draw it real quick and I'm going to delete it again. If you take this low at the neckline, right, to the high, basically reached 161% extension, right? And here we are, just challenging the neckline again. This is a natural place to be on the short side of the Kiwi for those of you that aren't short. I wish I would have been more patient, but I don't live in shoulda, woulda, coulda land either. For trading, I could sit here all day and beat myself up and say, oh, I should have just should have waited short it to here. But at the time, I was looking at this 38% retracement yesterday, thinking, all right, well, I think we'll stall around here. Obviously, yesterday rather, when we were up here, I'm sorry. We were at the 38% retracement yesterday, and I was thinking, okay, well, this is probably going to be it. But we did continue higher following the New Zealand CPI data. I thought the risk was that we'd get back up towards 72 cents, and I'm still not worried about it. Okay. Now we might get up to 72.20. 72.20 is this previous support right through here. All right. We've noted that from last week or the week before last. And we're there. I still think we're in a bearish trend. We just happen to be bouncing in that bearish trend. I think support now will be back down at 71.40. Now we do have the dairy auction results. They'll come out today. They tend to come out around 9 to 10. Eastern time. They don't have a set schedule for the dairy auction results, so they come in at random times, but they tend to come in after 9 o'clock. All right, guys. So when I get back, I'm going to take a break. I'm going to go grab some more coffee. We'll do the Aussie dollar index, peso, Swedish krona, Norwegian krona. Don't go anywhere. Thanks everybody for being here. Happy Tuesday. Glad you all are here with me. Be right back. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. So we're going to continue on with our analysis. We're going to do the Aussie now. I did short the Aussie this morning at 76.85. So I got a really, really good price. If you don't know why I shorted the Aussie, well, we're at triangle resistance. right? We're at the apex of the triangle. We're at the upper end of the triangle. Now, here's the thing. I'm very well aware that if the Aussie dollar breaks 77.50, it's going to be a very bullish move. There's no if and or buts about it. I mean, any which way you slice it. We're at the upper end of the triangle, so you have to be obviously on breakout alert when you're at, whether it's resistance or support. You gotta be on, the lookout. Oh, shit, I didn't want to do that. Sorry, I didn't mean to curse either. Damn, it's so early. It's only 5 o'clock in the morning here, guys. I've been up since 3, actually a little before 3. So anyway, yeah, sometimes it slips. Bear with me. Okay, so we're at triangle resistance, so you guys know that naturally I'm going to be shorting the Aussie up here. Now, like I said, I am aware that a break above 77.50 would be extremely bullish. Right now, the spike high here is the level that we should be watching today. Which I mean, I'm going to write down two levels. I'm going to write down 77.10, okay, and then also 77.50. So point 77.10, 77.50, and we are in the range. Now, I know some of you are like, but Blake, it's so bullish. You see, we moved 70 pips overnight, 50 or whatever the hell we did. Yeah, I understand that, but we're also at resistance. So remember what I said about gold a couple weeks back? Everybody would come up to me and they're like, Blake, gold looks so bullish. Looks so bullish. I'm like, yeah, it usually looks most bullish when you're at resistance. It looks most bullish when you're at resistance. Looks most bullish when you're at resistance. Looks most bullish when you're at resistance. I get it. I mean, Aussie dollars at resistance. Looks really bullish here, right? Always does. Until it doesn't. So, we're at resistance. It's key. Now, support. Support. Where is support? Well, support for now, let's see, I would say this 76.45, but below that you have 75.80. So I'm going to write down both of those, 75.80, 76.45. You need to write them both down because we're a little too close to 76.45. We could plow right through that. It's possible. You get some risk aversion in the market, or like crude oil's dumping right now, fall in gold, a tick up of inflation, whatever, we can plow right through that number. So I wouldn't get too attached with this support right here. Okay. Dollar index. Now, the dollar index, as we pointed out yesterday, we had gone pretty far, and I didn't want to do that. Hold on. I don't know why I just grabbed. I'm not sure what that is. Hold on. Let me get rid of this. What the hell did I just grab? Go to the weekly chart. Oh, I was grabbing that big fib. Well, I don't want to do that. All right, let's go back over to the daily. So the dollar is really bullish here. For those of you guys that are short, you can be real careful. Okay, this is roughly the breakout point, right? Roughly. You can, if you look really carefully, you have this resistance here, you have spike high here, spike high over here, spike high over here. This is all a zone. I mean, it's all whoops. It's all a zone area, right through here that's big support. And this is the breakout point. And you notice how we're holding it. So, while we're above 76.45, there's no reason to be short the dollar. No reason. All right. Now, in my opinion, the 127% extension at least needs to be hit. And that's from the highs that we saw in July to the lows that we saw in August. Now that we're broken out and we broke to new trend highs, 127% would be your minimum expectation. Okay. So 97.45, and then resistance is 98.20. Oops, I typed in the wrong number. What did I type in? What was it? 97.45, and then resistance is 98.20 right now. Okay, and it's a bullish breakout, guys. I mean, it is. It's a bullish breakout for right now. We start getting a 98.50, maybe a little higher. I'll be on the short side of the dollar. Depending on, obviously it depends on what's happening at that point in time. But I think that's a place that you want to be looking at, being short the dollar. Okay, which would probably put the euro at 108, 107.50, something like that, if we got all the way up here. Let's go over to, where was that? That was the dollar, right? Peso. Now, the peso, I think, for those of you that are, trading the peso or the Canadian, I think a lot of this, the move that you're seeing in the peso and the Canadian, it's the Trump-Clinton effect right now. And, the better that Clinton does, the stronger the peso is going to get. I really, really hope we get some risk aversion. Not for the reason because I want stocks to come crashing down. I really want to see some risk aversion. Okay, follow me really quick. I'd like to see some risk aversion in the stock market so the US dollar Mexican peso can bounce. And if the US dollar Mexican peso can bounce to 19.50 or close to 20, I am a seller. All right, I'd love to be. I think the trade of the last quarter of this year is going to be shorting the US dollar Mexican peso. I'm trying to find a place to do it, and I don't want to do it right now. Not after we've come off, a cent. I just don't want to do it here. I do want to establish a US dollar Mexican peso short, longer term. Again, I'm hoping for some risk aversion that crushes the peso. All right. It may not be the case. We'll see. Okay, so right now we have a 618 that comes into play at 1867. That should provide us some support here. And then, let's get rid of this little zone. 1867, we support, not great support, but remember we have the last presidential debate is on Wednesday, so look at this dollar yen's hitting new highs. Yeah, baby. Resistance at 1907. And we are in a range. Okay. Norwegian krona. Here's the Norwegian krona. Now, Chi in our chat room, he asked me yesterday, and he asked me again today. He's like, Blake, is that a double top? I'm like, yeah, it is, but I don't trust crude oil up here. So Chi, I hope you're not short the US dollar Norwegian krona, because do you see this hammer? right now. See, the problem is if crude starts selling off, this thing might have just posted a false breakdown and might rip right back up here. So I am not I'm not trading the Norwegian krona right now. And looking at the Swedish krona, the last thing I want to do is be short the U.S. dollar Norwegian krona. Watching how strong the U.S. dollar Swedish krona is at the moment, not my cup of tea. Not comfortable with it. All right. Um, I'm going to write down the lowest as support today because we're probably gonna create a nice little hammer here. Well, it depends on U.S. inflation data. I mean, if the CPI data comes in weak, then we might actually continue to come down a little bit. So I'll write down 810. That's a 50% retracement here. Probably be a nice little Garley pattern, or no, I guess it won't. That's a slightly lower high, maybe an 88% retracement, but anyway, 810 I'm going to write down as support. Not great support, but resistance. And you move back up towards 820. By the time we get up here, 823, should find some resistance. Oops. We're in range. One of the things that you have to keep in mind also about the Norwegian krona is that we had a false breakdown. See, that created that squeeze for the last couple of weeks, and I know we noted it before I left on vacation, but that's really why that thing ripped up in everybody's face. Okay. Hold on really quick. I'm looking at the pound New Zealand, pound Aussie, pound Canadian. I'm thinking about selling those, just taking a little bit of profit off the table, but not yet. Not yet. Not yet. Nope. All right, Swedish krona. So here's the Swedish krona. All right, now what's the spike high here? Spike high here is 864.60. Right now, we're right at resistance right now. Um, 870, basically 875, 8.75. Resistance is really right where we're at, but I'm gonna this is, I mean, we are at resistance right now, but really key resistance is 887. That's what we really need to pay attention to. 887, and I'm long some. I'd like to get aggressive, but wait till the breakout. And here's the thing, this is bullish because we're already breaking that flag. For those of you that don't know, it's already breaking out of the flag. And if it breaks above 888, we should hit 9 pretty quick. You know, we should be at 9. And if you guys haven't seen the US dollar Swedish krona on a longer term basis, then this is the lead indicator for the dollar. Always has been in my book. It's something that I've watched carefully for, you know, the last decade or so. You know, just watching the Swedish krona and how it reacts and how it tends to lead the dollar. This is a massive breakout, and if we break above 887, I mean, we can trade up to 1050. That's bullish. any which way you slice it. Okay? Any which way you slice it. And it's not like it's going to uncharted territory either. It's, you know. All right, there's your bias chart. Let me take some questions. First question comes in from Patrick H.